Oh, Lord. So I had to go to the dermatologist today, and I showed her different things on my body. That's always good. And she's like, "Now, are you going to be able to roll up your pants leg?" Like, I can't roll up my pants leg. I think she thought it was probably too tight on my leg or something. And I said, "Girl, if I can't," I said, "I am prepared to go buff. I am ready." And she didn't laugh at that. You know, a lot of people in the medical field do not have, um, they do not have a sense of humor sometimes. But anyway, so then she gives me a shot in my arm because she's like, "I got to take a biopsy on your arm." And I'm like, "Holy Shimon, y'all. Whew, boy, does that hurt." Uh, so anyway, the biopsy didn't hurt, but the shot, man, the shot. So I'm still bleeding like a stuck pig. All right, so I hope y'all having a good day. All right, Matt and Dwayne, so we can take care of y'all specifically. I hate starting so late, but Matt, we can talk about your stuff if you can stay over, or we can do it now. We can do whatever you want to. So yesterday, you will notice, we got something in the chat going on. I have to leave early. Okay, Dwayne, got you. How was the salmon yesterday? Hope that was good. So yesterday, y'all remember I had the order, GTC order, good till cancel, to buy 5, right? And that little puppy failed. So I need to put that into my little spreadsheet here. See if I got my spreadsheet working good. All right, Black Swan hedge. Here we go. So let's put that in while we're together. So I had the 3 here, right? Date that the loans were bought. Now you see right now, we've been averaging 17 days to complete the hedge. Let's see how long it took to complete this hedge. Go back to BSH. So we bought them yesterday, so 7/14/21, and it took only 6 days to complete the hedge. So the last one we did took 6 days. One took 26. One we did on the same day. One took 35. So now, on average, it's taking 15 days for our hedge to complete after we sell our shorts. So now instead of it being short puts, we're going to change this to fully formed BSH. Our price of our loans was $1.70. Cha-ching, cha-ching. There we go. Make sure everything looks right. And so now, yep, we got them in there. Took $1.70. So let's look on our hedges now and see what we've got. It should tell us that we've got 1, 5, 6, 7, 8 fully formed Black Swan hedges. Let's see if it does. Have I got it working right? Yes, it does. It says we have 8 total completed 3x5s in our portfolio, which gives us 24 shorts. It gives us 40 longs. We are net long 16. And for this humongous hedge that we have, how much has it cost us? So we've collected credits and we've paid out debits. Altogether, my hedge has cost me out of my pocket $935.18. What do we get for that? Well, let's see what we get for it. So let's go over to the Analyze tab. And let's change this to ES. Yes. I say, let's change this to ES. What does it get us? So show all or hide simulations. Show symbol, single symbol. All right, and we want to do our little 4 vol steps. I say we want to do our 4 vol steps. Vol step 4. Beautiful. Now, for $935, but we got to take out our space trip trades. So let's take them out. Just look what our hedge itself looks like without the space trip trades. So we take those out. We've got 2 space trip trades on deck. So let's look and see what we got going on. All right. So if the market goes down 20%, let's change this to 20. Market goes down 20%, we're up $9,826. But wait, friends, that doesn't take into account the volatility going up to where we think it would go with a 20-point decrease in the market. So with a 20-point decrease, that would be 41.30. No, that would be, let me move this in so we can see our little hedge here. So for $935, here's the, see that 34.8275, that represents this, the 20% down. So if the market goes 20% down, my $935 investment will make me upwards of $121,000. Follow the yellow, y'all. Anywhere from 85,000 to 122,000. Am I happy with that? You dang right, because the day will come when we're going to crack that. The day will come. Now, it may not be this year, may not be next year, but it's going to come. And what we're going to keep doing is we're going to put these trades on until the market crashes. And then after the crashes, we're going to cash it in. We're going to take a trip to the Cayman Islands. We're going to make a deposit. No, we're going to the Cayman Islands, where I've been before, and we're going to have a lot of fun. All right, so now how does it look? So we said we'd be up 121,000, but wait, we also have space trip trades. What's that going to do? We may not be up 121,000 with all of our space trip trades in there. So let's put those in. Let's see how bad it looks. So then 20% drop. Oh, dang it. We're only up $107,000. Dang it. Because of our stupid space trip trades. I could live with that. Matt, could you live with that? I think Matt could live with that.
I think I could.
Yeah. So Matt and I were talking about yesterday over trading. Matt, I don't hope you mind me using you as guinea pig.
That's fine.
Can we overtrade? Yes, we can overtrade. With this, if I've got this on, should I be doing anything? No, not really. Right? I've got this wonderful, wonderful little thing on that gives me a beautiful, beautiful hedge. The only thing I should be doing is harvesting my shorts, taking those off and making my wall even stronger, and then watching the market moves to add to this, right? To add to this and to start building other black swan hedges. Because I wish I hope I get to 50 black swan hedges on before the market crashes. And then Bobby's really going to be doing good, right? Then I can really send my car, instead of my kids going to the University of Georgia, they could go to University of Alabama. I could pay out of state tuition then if this happens, right? Otherwise, they got to go to a Georgia school because I ain't paying no out of state. All right. So here we are. So life is good, y'all. Life is really, really good. Now, what if you say, well, wait a minute, Bobby, but you got a bunch of other stuff. You sold some short puts and everything. Well, let's put the portfolio beta weighted in and see what we're going to do then. Let's see how it looks. Does it still look good with my whole portfolio in? So now it says if I go down that much, dang it, I'm only up $90,000. I'm only up 89,000. Crap. Where have I gone wrong? Right? That's with my short puts, with my rig trade, with everything that I got going on. So I think I feel pretty doggone good about the market going down. All right. So says my overall deltas. Let's see what my overall thing is here. So I've got to now move these. I've recorded the trade. So I got to move this to the group of the BSH5 shorts. So I move it there. But that's not just shorts anymore, is it? So I go BSH5. We're going to rename this puppy. Rename it. And we'll just call it BSH5. And then I'll put the little word complete. That means it is complete, baby. We've got our longs completed. We got our shorts completed. There we go. Boom, chakalaka, boom. Yes, I'm sure. Dang you. Yeah, beautiful. So we got that one complete. Hey, it's up $200. Beautiful. All right. So we could close that for a profit if we wanted to. So all my boot, I got 8 of them all together. So I sold a micro yesterday. So where do I put it? I got to put him in his little place. So I'm going to move him to micro short puts. There you go, baby. Then I got an SPX. What should I call that? Well, we know what we call that. That's a Rick trade, right? So I'm going to call that just a Rick trade. Rick trade. Because we love our man Rick. Let's see, move to group. Then I'll have to say add group, and we'll call it Rick Trades. When you you say Rick, you got to put him in all capitalized. Rick Trade. There it goes. So I got my Rick Trade. Now, how does my Rick Trade look? Well, let's look at it. Analyze. What do you do, friend? All you got to do here is go to SPX and hide simulations and go to single symbol, single symbol. Remember, I told Rick, I said, my apologies, Rick, I'm selling this. You know what that means? The market's going to tank. Now, has the market tanked? I don't know because I haven't looked at anything today. Why? Because I've been getting, we got to take a biopsy of my, there's my little Rick Trade. I think she's looking good, y'all. Look at there. At expiration, Sweet Bobby should make 50 bucks, right? What is it now? Oh, crap. It's down $12.25. All right, so what is the market doing? Let's see what our market's doing today. Wow, SPX is down. Wow, look at this. So if I go /ES, /ES. Oh, hold on a minute. Let me go. I don't want to go to volume profile yet. Let's go to our 0 DTE trade and see what we look like. Oh my gosh, it's bad. Don't shut that dog up. I apologize, y'all. Oh my gosh, y'all, the market is down. What? 0.44%, 0.45%. What do we get to do today? Dwayne, Matt, what do I get to do?
Sell 3.
Yeah. I mean, like clockwork. Matt, you ought to be selling 3 today if you got everything completed. Now, let's look.
I don't have everything completed.
Okay. Yeah. So don't push it then. Don't push it. So
right.
if you've got everything completed though, then today's a good day to do it. Now, I'm going to kind of watch this and I'm going to kind of wait until I think we're going back to the overnight low. See, it appears like we're in a range day. The shaded area is the 15-minute opening range of the day. And it looks like the price is pretty much adhering to the 15 level. So there's a good chance we're going to go down here. So yeah, could we go much farther? Yes, but I don't know how to time the market. I have no idea. All I know is AD will probably go back to this area. Price will probably go back to this area. When we get to this area, then I'll be selling another put. So let's see what another 3. So let's see what that looks like, okay? Can I sell another 3? Are you scared, Bobby? Are you scared? No, I'm not scared. And you don't be
So
scared.
would you set an alert?
I could
if it hits down there.
I could easily set an alert, or I could set a premium little price too. Let's try doing something like that. So yeah, you could do that. You could set an alert for that price. I would
That price level, and then reevaluate.
And I bet you, Matt, that this thing is probably going to happen even while we're together. So let's just look at this. AM settlements. I can't believe I got stuff in the AM settlements. But we'll be out of them way before that on ES. So we got, let's see, we want to make sure this thing is 60 days out or more. Boy, there's no strikes there, are there? What is this thing? I got all strikes. No wonder we don't want that at all. Let's see what else we got. We've got a 77 days out that we could go. Let's just look at our prices. Here's where we've already got positions. So we could go, you could go to 2,600, 2,550. Sounds like a good place in. And the cool thing is I could even do this. I could even do 6 of these, couldn't I? So let's just see what it looks like. So let's pretend we're going to sell 3.
So you're still going on the sell it for $3, not the 72% out of the money.
Yeah, I'm still fine with this, right? I'm still good with it. And you see by the structure that we've got going on, everything looks good anyway. So what's this? Let's analyze this trade. This should change to ES, but it'll change to ES that specific expiration. Well, I think it will. Okay, ES, there we go. ES. So now let's hide positions. So it just shows us our simulations. And let's find that 3. Okay, there's one we need to take out. I think this is the one we need to take out. So it was a 2650. I think that's it. And then to make sure that's the only one I got showing, just undo it to make sure your graph goes flat. Graph goes flat, so that's the only one in here. So I'll do this. So now you go, okay, how's it going to be if I do show all? Show all. And then I want to go see what it looks like in a crash. So to simulate a crash, I go to vol steps. I want to see all 4 steps. And I'd like to see what's going to happen down at this 20% level. So 20% down, it says I'm going to be down $4,659. But we know that doesn't include volatility. So I've bumped the volatility up 15%. That would happen. But we think that VIX or the volatility in ES would be around 76%, or anywhere from 61 to 76. So if I go down here, follow the yellow on the left, I'm still up 66,000, 41,000 to 66,000. Am I happy with that? Oh, heck yeah. So am I fearful to sell 3? Oh, heck no. Now watch this. What if all of a sudden I say, man, I think this market's going to go right back up. So I'm going to sell 6 today. I'm going to be a big dog. 4, 5, 6. Okay. Then you go down here and you say, well, what does that do? Well, now you're up 26,000, 11,000 to 26,000 on the crash. Still good, right? But I think I would just take my chances and say, look, let's do it at 3. Let's go 3. Let's take our 66,000 if we crash and be done with it. Well, you say, well, Bobby, that's just single symbol. What if you take in your whole portfolio? We're trying to simulate a 20% drop down in the whole thing. What does that look like? And that looks like, hey, I'm up 42 to $77,000. Oh, sorry. Make that 3. 3 here. So my portfolio can still absorb that, right? I'm still up 32 to $63,000. So that's how you do it, Matt. That's exactly what you do with your little thing. And I say, hey, man, I like this. So what you could do is we could set an alert on the chart for price going back down there. It's probably going to do it in the next few minutes. The other thing you can do is this. You could go back to your trade tab and you could say, hey, let's move this up to, what if I got 330, 335, 340, 345, 350. I mean, we could simulate what it would do if the market went down there, right? So we sell 3. Let me just confirm and send. So in other words, market goes down, my premium collected should go up. So you could just work that order too if you wanted to. Let that order work for a while. I'll just kind of keep an eye on it. But yeah, you're right. You're working a job. You don't want to know. You can set an alert and say, I got a feeling we're going to tap down here again today. When we tap it, let's put it in. But again, the great thing about the Black Swan Hedge program, you ain't got to do any of this. I could fill it right now for $3 and be totally, totally safe. Totally safe. I could sell 6 and be totally safe. So what happens? Let's say that, I'm right and I get filled right here. Now let's say the market drops off another 30, 40 points. Heck, what could I do? I could sell another one and still be totally fine. How many days does it take me on average to fill the loans? Well, so far it's taken me 15 days. And the last time that so that's why I keep stats, right? I like to know. So the last time that I did it, it only took me 6 days to fill. Time before that, it only took 6 days. Now the time before that took me 26 days. And one time when the market didn't go up a lot, it was jaggling around, it took me a whole 35 days to get filled on that. So, keep those stats. You don't have to, but I know I've got 8 Black Swan hedges and I am now gunning for my 9th. And all that protection, all those tens of thousands of dollars that could potentially come to my account has cost me a whopping $935. That ain't bad. That ain't bad at all. And this number should get better because why? Because that which we sell for $350, let's pretend I get filled at $350 today, and I'm going to harvest those loans at 20, then I can get filled here for maybe 185. Yeah, I can get one filled for 185. Can I make it to 190 and still have a credit? Nope, I'll be 2 cents in the hole. So I'm going to fill that for $1.85 if that 350 fills. That's how easy that is. And man, you got the greatest little Black Swan hedge factory going. You've got a factory. Max, you're not trading every day. You are not trading every day. Well, should I sell a put today? Well, should you? What do? You go to the trade tab and you say, hey, Bob, hey, the dang market, man, it's down, 0.45%. Isn't that when we start selling stuff? Well, heck yeah. Can I sell a micro? Well, heck yeah, you can. How do you know you can? Well, you go in here, you change this to the micros, right? And so you change this to the macros. Here we go. Change it to the macros. There we go. Where are we going to sell it at? Well, I sell it where I like to sell it. I like selling it at the, waiting for data, closest to 60 days without going over. And I normally go to the 10 delta. Sweet. So let's go find the 10% probability of being in the money. And I think I'll go ahead and sell one. Bobby, are you sure you can do it? Well, of course I am. Because what do? You go 10% probability of being in the money. It's a 38.50, 47 days out. Click on that. Then what do? Well, you right click. You analyze the trade. Analyze trade. Let's see what she looks like. All right, so then we come over here and it's got the MES. Well, I like looking at everything either on SPY or the ES. And I've got my price slices set up on SPY and ES. So what we'll do is we'll change this either to SPY so we can see our SPY deltas and everything. So let's go SPY. I say, boy, we go SPY. There we go. Here's SPY. And I say show all portfolio. Well, here's my 0.3. So let's take that out of the equation, right? Because we hadn't sold those 3 yet. So let's say that we're going to sell just the 1 micro today. Let's make sure that it's the only other thing showing up. And to do that, all you got to do is go hide positions. So it just shows you your simulated trades. And I should be taking these out much, much quicker. So I'm going to take this one out and this one out. This is stuff we were talking about the other night. Let's take those out. Let's take those out. So the only, no, we don't want a calendar on there. Take that garbage out. Take that out. So then you got, okay, there's our single put. And let's take this out. So we're only looking at our one particular trade. All right. Sell a single, we'll take that. Well, we're taking that out. All right, so then we'll go to 1 expiration. Well, let's just see what we're showing now. So we should be showing just selling the 1 micro. So let's look at selling 1 micro. If I undo it, make sure that's the only thing showing. Yep, that's it. Now what you do is you go show all. So we'll show all of our positions. Check this out. I say we'll show all of our positions. There we go. So what happens on the event of a 20% drop? 20% drop with the volatility going up to 76%, anywhere from 61 to 76%, right? What happens? Well, Sweet Bobby's up $31,000 to $60,000. Can I sell a micro ES? This will be my third day in a row selling it. Can I sell it? Yeah, I'm fine. I got no problem to the downside. This is my whole portfolio. Looking down, up $30,000 to $60,000. Yeah, I'll sell a naked put. All right, everybody see how easy that is? So what we're doing is stress testing our portfolio on the downside. So we make sure we can do that. So let's go back to my trade tab and let's sell this for $16.25. Shaboom, shaboom. Get us $80 worth of credit in. I say get us $80 worth of credit in. Phil, you dumb thing. There we go. So we're filled. All right. So then if you want to actually see it in your portfolio, now you can go to Analyze tab and you can go hide simulations because it's no longer a simulation, is it? It's an actual trade. So look at these different numbers, right? Profit and loss has a 750. So it even says here, if you go down 35%, you're up 38.40. So I got to change that back to 20. My bad. I'm overstating my numbers. I normally stress for 20% down. 20%. There. You're down $20,000, Bob. But am I really? No, because that doesn't take into account volatility. What happens when volatility shows up and you get volatility or a VIX of about 76 on a 20% down, anywhere from 61 to a 76% on the way down, I'm up 51,000 to 86,000. Sweet. I mean, I could sell, a whole ES probably, right? Contract, but no need to do that. Do it in the micros, kind of build those puppies up. So this is the assurance that we have. So Matt, when you're stress testing this thing, go in here, put it on vol step, set your pie slices to whatever you like. What do I like? Let's show what I like. I like seeing what happens 5% up, 10%, and 15%. I like seeing 5% down, 12% down. Why 12%? Because that's where they calculate margin requirements. It's kind of an important level. Then I go down to 20%. It's just where I'm comfortable with my 7 price slices. Everybody knows how to do that too, right? Hit the little button right here to add your price slices, change that to percentage. So you always want to see what's going on at the money, right? And then our beta symbol is SPY. So on our beta symbol SPY, we've got 205 positive deltas, we've got positive theta, and we've got just a tad of negative vega. Beautiful, right? Isn't it nice having positive deltas in a bull market with such wonderful protection to the downside? Isn't that beautiful? Beautiful. So that's what we got. So that's what our account is made up of right now. So we are, what do we have? We've got the VIX hedge in place. We got a couple of space trip trades in place, and we've got 8 tranches of the Black Swan hedge. We got 1 RIC trade on just for the heck of it. And then we've got our BAME stuff. How's our BAME stuff doing today? It's down $207. Cool thing is, I should actually change that to AIM, shouldn't I? Because I stopped doing the BAME in this account. Hold on, let me change that so it'll remind me that we're doing the AIM in that account. And AIM is so easy. Doesn't matter your account size, you can run AIM easy. You want some stock positions in your portfolio? Do it, baby. So all you got to do on the AIM thing is go to your dashboard, right? And this automatically pulls your prices in. Hold on, I'm on the wrong one. Where is my, let's see, go over here. AIM dashboard. Go to my AIM dashboard, and I look for take action signals, right? Day before yesterday, we had signals here telling me to buy and to sell and to buy and to sell. So right now, I don't have a single symbol. So what I do, nothing. I'm done for the day. I sold a micro. When I say I sold a micro, right? I sold a micro. The market is down over 0.4%. I don't know where it's going for the rest of the day. Let's look really quick like on the big green monster. Let's just see what we think price. Hey, Matt, look. What did we say? We said price is coming back down here, and it went past it, didn't it? We were back here, and I told you before we get finished, we're going down here. Danged if it didn't. That's when I should have got filled. So hold on, let's go and change our order a little bit. We'll just go ahead and get it filled. Let's sell our 3 in our new Black Swan hedge. So that was going for 3 1/4. See if we can get a little bit better. 3 1/4. Can I get a little better? 330 to 340. Let's try 340. See if we can fill those 3. Because what's the rule? Market goes down 0.4% or more, and you've got all your tranches complete. I got 8 Black Swan hedges. Sell another one. Doesn't look like we got filled there, so we'll move it around a bit. Don't stumble over pennies on your way to making dollars. I mean, it's okay to try it out and to work it out, but let's get filled. Let's don't let this market go back up. But Bobby, what if the market ends up being down 3% today? Well, so be it. I followed the rules, right? What's the rule? Market down 0.4, sell 3. See if we get filled there. And we're filled. Bingo. All right. So we got filled. Hold on a second. It was already filled before I did it. Good. All right, so let's see what we got filled for. Filled orders today. We sold a micro, and we sold the 2650 puts, and we sold them for 340. What expiration did we do that in? We did that in the 77 days. All right. All right, so let's go put that order into our spreadsheet so we can keep up with our Black Swan hedges. So we'll go to Black Swan hedge. Very easy to do. Watch this. So we sold the ES. I say it's very easy to do. Gonna make me type it in. All right, so force, what is that? What is that? Here we go. /ES. What in the name of the Lord is happening? Hold on. Now, /ES. Right? How many contracts? Remember, put a negative here. We sold 3 contracts. All right. That's a one thing. Then we make this say short puts. All right. What were the strikes? The strikes were, easier to pull it up on my phone, as long as it recognizes my face. Hello. Hello, little thing. So my order was 2650. 2650. We got entered on the 15th of July. How many days to expiration? It was 77 days. This keeps up with everything. All right. So here we go. And the price was $3.40. So we took in a credit of $503.94. Okay, now the cool thing is you can go to your hedge page, and your hedge tells you that you've got 8 completed Black Swan hedges, and you've got 3 shorts, right? And it tells me that I have taken in credits of $4,800. I have spent out $5,200. And the total cost of that enormous $100,000 hedge that I have in place has cost me all of $431. This number will go down as we continue, right? Because we're going to be putting these on for credits every time. So what do I do now? Well, then I go here to my calculator and I go, okay, one are inputs. Okay, we're doing 1 tranche, so 3 puts. What was the price of my shorts? I was able to sell those for $3.40. Okay. So it tells me that if I harvest those shorts, once they get down to 20 cents, and I buy the longs for $1.80, that the overall trade will be put on for about a $10 credit. So isn't it awesome to be able to put on hedges that have 0 cost? I hope you understand what we're saying. We're saying we're getting tens of thousands of dollars of hedges, and we're able to put those on for a net credit. So that when the trade, if the market continues to go up, we don't lose money. If the market goes down, we don't lose money, as long as we don't go into the valley of death. How do we get rid of the valley of death? We close those shorts when they get down to 20 cents, or we close them when they're down to about 21 to 14 days, so that we're not hurt by the valley of death. So I've just basically, when I fill those longs for $1.80, I've got this hedge on, this powerful hedge on, for absolutely free. So what do? Here's what you do. So now we sold those 3 for $3.40, right? And this expiration, what do? You go ahead and put a GTC, because Matt, you've got a job, right? You've got stuff you got to do. Tom, you've got a job, you're busy. So we're going to put in 5. We're going to buy our 5. What we're going to buy them for, I forget, $1.80. So we're going to buy them for $1.80. So I put my order in for $1.80. Okay. And then I change it to GTC. The only problem is, Matt, if you are in Tastyworks, you can't do a GTC order in futures, right? It's kind of crazy. You need to email them, say, hey, boys, we need that. We're Black Swan hedge traders. So we'll do confirm and send. And I got to do nothing now. What have I got to do? I got to go take my afternoon nap. I got to play with the pigs. I got to milk the chickens. I got to collect eggs from the goats. Easy. Easy peasy, easy peasy. And I've got a Black Swan hedge campaign. Now, you want to be greedy? Hey, if you're not using this as a hedge, you want to use it as income, buy that puppy instead of $1.80. See, my thing is I want it on as quickly as possible because what am I doing? I'm hedging my micro trades, my short put trades, if you're doing them in the ES or you're doing credit spreads and SPX. You're using these to hedge those. Now, if you're doing this for income, buy back when it's at $1.50. No big deal, right? So if you bought it back at $1.50, then you're putting a hedge trade on. Now it's going to take you a little longer to fill, right? But the whole overall credit, you're going to get an $84 credit. And that's an income trade. It's not a lot of income, but it's nice to have an income trade on that's also acting as a hedge. And can I afford to do this? Well, of course I can. I've got 8 Black Swan hedges on, people. I've got 8 of these puppies on. I'm building a factory. I'm in the factory building business. I'm building walls, baby. I'm building walls. How long is it going to take me to fill those at $1.80? Well, I can tell you this. On average, it's been taking me 15 days. So I think 2 weeks from now, I'll be buying those loans at $1.80. If the market really goes up, I'll be buying them maybe in 6 days. The last 2 times you and I put on hedges, the hedge got filled in 6 days. Keep your stats, people. Keep your stats. That way you know what to expect. It may take me 15, may take me 35. On average, it's going to take me 15 days for that.
Mine have been taking forever.
Have they? Hey, maybe I'm missing something. So I'm glad you're covering this today. And just first time that it's not 12-1, so I can jump on. I put on, let's see, back on 6/2. I did one on ES. I got 305 for it. And that was at the time, it was 107 DTE for 305. That thing is down to 80 cents, but it's already been 43 days. And I'm still only at 80 cents. So I still have a ways to go. So I'm not finding either something different or my decay is just taking way more than 30 to 40 days. Yeah, and I think you've answered that question too, right? So this one's put in a 77 DTE, and yours was like 170 something. Well, I wouldn't say it's too long. It's just that these are going to decay slower, right?
So I have another one that I put on June 18th at 465. So I went a little bit more expensive. I did something a little different, but at 2150. Strike, I put it on at 465. That's at $1.17. I mean, so that one's it's come out quicker because it was shorter, but still a ways to go.
Yeah, so find your comfort spot. I just wouldn't go under about 60 days, but anything above that, and you're fine. And you will find that slower decay out. But the cool thing, Tom, also, it's a disadvantage that you get slower decay out there. But another advantage is what? If the market makes a humongous move, it really is not going to affect you that much out that far. So there are advantages to being out that far. And Tom, use this BSH break even. So you sold that one at what? 4?
So I did one. I sold one for 465.
So you sold it at 465. I would expect you to harvest that at 20. So you could buy your loans at, hold on a second, let's do it here. Data. Let's go to Solver. So let's go to Solver. Here we go. So we're going to set objective. We're going to set objective K2 to a value of 0 by changing F2. Looks good. So let's solve for that. So you can buy back your loans for chugga 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 chugga. Sorry, my system's so slow. But I mean, it's better than having to go through this manually and calculate it. Right here we go, and it says 259. So
Yeah.
look at that. How
So,
cool is
and
that?
I'm
So
past that now, so I need to stick them on.
yeah,
But
so
that was that was unusual when I went to 465. Normally I'm trying to stick around that. I just put a new one on recently, but I did it again a 99-day one just recently. So you think that's a little long? You think I should cut that down to like 77 to 80, 90?
I mean, you could do that if you want the faster decay. But the good news is, look at you. So now you can fill that for what, 80?
Let's see. The one
can you
that
fill the
I
loans
just
for?
put on, the most recent one that I put on for 345, it's down to 222. And then the one I did for
345.
305 originally is down to 80 cents.
Oh yeah. So I mean, can you imagine putting that on for 80 cents? So I mean, I would fill that one today. I would buy the loans, and what I would do, Tom, I would go and sell another 3 today.
Got it. Yeah. So I just did what was it? The 8th. So about a week ago. So
Yeah.
I'm sitting right now on 18 short and 25 long.
18 short and 25 long. Gotcha.
Because I have the extra 3. So.
Yep. So look at this. If you sold them for 465 and you're filling your loans for 80, I mean, you could change the price of the harvest if you wanted to, but if you still harvest them as the plan calls for, look at there. I mean, you're gonna make $450 on that trade, win, lose, or draw.
Yep.
How sweet is that to have on a humongous hedge and to do it all for a $450 credit?
Yep. And even my credit right now is not, or my debit right now overall is still not too bad. So I still feel pretty good that I have it on, and with all the other stuff that I have on, I feel pretty good.
Yeah, that's great. And then that makes selling those micro puts or micro strangles or whatever you're doing, makes it.
I'm still doing those every single day. I moved from puts to strangles.
Yeah.
I don't know if that was the right idea, but I think Don Kaufman talked me into it. Just listen to him again. But
I'll tell you the funny stuff about Don, right? So I love his morning commentary. I love listening to Don for the first hour of the day. And I'll listen to Don, and oh my God, he gets me so nervous and scared that I'm like, I'm buying puts, I'm doing, and then the market does nothing, right? It's just so funny. I laugh at Don, and he gets me all worked up sometimes. It's kind of funny.
But I just started putting, the puts have been fantastic. I just started putting on the calls. Now the calls I'm only getting like $2 to $4 out that far, so they're giving me almost nothing. But on a day like today, they're still all profitable. So even the calls, even though this market's been going up, almost every call is positive P&L.
That's nice.
Yeah.
That's
so
nice.
Still getting positive P&L. It adds a little bit of juice. Maybe once we start getting a little less skew, we can get a little bit more for that for the call.
And Tom, what you said, is so true too. I mean, you're doing it with no additional buying power.
Right.
So, it's a very efficient trade.
As long as it doesn't cost me, as long as I don't take any losses on them, then it's good. Yeah, but I have so much other delta, positive delta trades on, wheel trades, things like that, if the market goes up, what I'm going to lose on those, I'll make up on other positive delta trades.
Sure. Well, I'm glad you're doing the Black Swan hedge, though. I thought it's just a great little trade.
I like it.
It's a great little trade, and I think it's fun. What I love is the strategy of trying to do a costless hedge, and sometimes we get bitten, trying to do those, but most of the time they work out just fine. And especially as I did, I purchased 4 tranches for the, that gives me a little bit of confidence in being able to sell some shorts against the long. Then I go to the Analyze tab, check it out, make sure that I'm safe, and I'm totally fine selling those 3 puts that we just sold today. And if the market tanks, I may sell another 3. Or if the market tanks tomorrow, I may sell another 3. All according to what the Analyze tab tells me that I can do. So really, really good. Well, Tom, it's good having you in here. How's the wheel trade going? You know, the wheel trade was the trade du jour, so to speak, of the last year, and everybody and their mama was doing it. And like you said, what they were trying to do though is they were trying to wheel on the on all the mean
Yeah,
stocks,
which is
you know.
bananas.
Yeah.
They're probably not enjoying that if we slow down. My wheel trades have really slowed down significantly over the last couple of weeks because I'm just not finding, you know, the risk to the premium is just not worth it right now. And I'm going to wait till some things drop. And then I like to buy, you know, I like to put on those wheel trades when we get closer to a support level, and we're not really near a support level. And if something's at support right now, it's not really a very good stock. So.
Yeah, look, VIX is up a little bit today, but still, you know, we kind of got spoiled, I think, to VIX being over 20, and now we see certainly the volatility is has popped out a little bit.
Yeah, and that's my other hedge. So I've got a bunch of VIX volatility spreads on as well. So.
And what else are you doing? You got the wheel trade going on. You got the VIX hedge. You got the Black Swan hedge. You got the wheels. You got the micros.
Yeah,
the
I've been doing
Zeebs.
the Zeeb trade from Tony from Mexico, which has been pretty interesting. It's been profitable. Every one of them has been profitable. I don't know if this week's will be, but another one I really love, and it's the 111 trade.
Tell us about that. Help us set it up, Tom. Let's just talk about that and tell us what it is. What instrument?
Yeah.
What do I go to?
111's it's a version of like the 441 that Tony from Mexico did as well. But the 111, I like to do it in MES. Although I think SPY, if you have the buying power, SPY would be great. Because I don't mind getting assigned shares in SPY on a big drop. And I'm fine. I would be fine if I owned 1 million shares of SPY. I would stop working. So you can do it in MES, which gives you greater buying power. But essentially what you want to do is go out 45 days. So if you want to go out 45 days on MES.
Come on, give me my data. It's waiting for data. Here we go. 45 days. So we got a 47-day expiration. Okay.
Yeah. So 45 days, and we're going to buy a 50 wide put spread. So maybe look at starting at like the 25 delta, and then we'll adjust from there. So look at buying a 25 delta put and then go 50 wide.
Okay, so buy this 41, maybe 41.50.
Yeah, either one. It doesn't matter. You're probably going to have to adjust up anyway, and then sell the 4,100.
Okay, so we'll buy the 41.50, sell the 4,100. Okay, let's look at that.
But we're going to want to pay $10. So right now you're paying quite a bit more for that spread.
Okay, let's see.
So we're going to have to just adjust them upwards somewhere.
Okay, so we want to get a debit of $10.
Yeah, so we want to pay around $10. So we're going to have to go higher.
So let's go to the 4,200 maybe?
Yeah, go 4,200 and 4,250 and see how those look. In fact, I just put one on yesterday, so I can probably tell you what I have. Make it easy. Yesterday I did, I'd say I have a 42. I did like 42.90, 42.40 yesterday. But with it dropping today, you might be close.
Okay, so we got that up to 825, 4250, 4200. So what that looks like. We'll work it out. 4200. There we go. Look at there. $10.
Perfect. There you go. You're right on it. So it's going to cost you $10 to put this on. Then what we want to do is we're going to then go out and sell a naked put for $20 credit.
Okay, so a naked put in the same expiration.
Same expiration. We're just going to go down and we're going to find the $20 credit one right about there. Yep, there you go, like 3,900. And we'll put that on, which means we're going to take the whole thing's going to give us $10 in credit.
How about that? Let's analyze it. Is that okay?
Yeah, bring it up. It's going to look, well, I'll once you pull it up. I do another trade I call a bear trap, which some people, used to look like an iron duck, if you're familiar with what that is. But it's like you'll see it's a pretty interesting looking device.
Got a single symbol, hide positions. Let's see. Let me get rid of this. There we go. And we'll go to one expiration. See what this thing looks like.
This is one of my new favorites. I really like this trade.
Okay, let's look at this. Oh, cool.
So there you go. So if we drop into, if we don't drop, we're going to make, $100 and some dollars, right?
Yeah.
And I'll do 2 of these instead of just one, but
Okay.
just for analyze today for this. So if we don't go down, we make money. If we go down a little bit, we could make a lot, more depending on how the T+0 line looks. If we go into what I call the trap there, you could make a pretty good return.
Yeah. So
And
over
then-
time, well,
Yeah.
it's kind of like the space trip trade. Looks really similar. Over time, this thing is going to build a hump to the
Yes.
downside, right?
Yep.
And that's what
The
you're
only thing
looking at.
that'll hurt you is if we go down hard and fast,
Right.
then that line. But if we go down slow or what have you, now the loss is unlimited, which is why I like to do this in SPY. But if you do it in MES, it's fine. So you have 2 options at the end. There's a couple things we can do with this trade is if we drop really hard, you can get assigned MES. And you know what? Getting assigned MES down at that strike is not the worst thing in the world. Now, if you can afford it, and MES is not too expensive. So doing it in SPY means it's a way to buy SPY at a really big discount as well. Something else you can do that if you put 2 of these on, for all 3 of the strikes, then you could potentially sell or buy back that really far out of the money one when it gets to roughly $10, which basically puts a free trade on.
Oh, I'm trying to show.
It doesn't really put a free trade on, but what it'll do is it'll lessen the downside.
Say that one more time. I was playing with the chart. Say that one more time. Tom.
One thing you can do if you do 2s of these, and I like to do them in pairs of 2 or 4 or 6 or whatever, 2s typically, right? If that far out of the money put that we sold for 20 gets to $10 because we keep moving up, then I buy one of those back and it becomes a 2-2-1. But you've lowered the risk on the far side of things as well.
And one thing I kind of like about this, it does look a lot like a space trip trade. What I do like about it is that you're putting it on for a credit.
Putting it on for a credit. I can't lose if we go higher. And if you do this in SPY, like I said, you can get assigned. If your buying power is not a concern and you get assigned SPY, I mean, you're getting assigned SPY at a gigantic discount. I mean, the world would really have to be spinning low for us to get assigned SPY down there. But if you do, then now I own SPY at a really good price. I could also roll that MES out if I get tested. But
yeah, so
and it's only 3 legs, so it's not a very costly trade. It's easy to manage.
Yeah, so your lowest short strike down at 3,900. Yeah. So I see what you're saying. If you were to get assigned, then you buying it at a really, really big discount.
Right. And you still don't lose for another, good handful of strikes. So
well, another good thing about this one is so that's a 12% down move to there where my price slice is. And the thing is, you've got black swan hedges back here, right? That are
yep, I have a black swan hedge, so this thing does not scare me one bit.
Let's see what it looks like. Let's see if we can put our portfolio in there. Let's see. Let's make sure that's the only. We'll go to portfolio. Weighted. And let's go show all. And then let's move our. Let's don't do expirations. I like doing the vol step. Pop it up 4. Hold on, let me make sure one thing though. Let me see, hide positions, get all my other, let's take that out so that we just have that one Uh, simulation. Now let's show all. Just see how we would be on the downside of a big move down. That should pick up. Yeah. So we would expect volatility to pick up there. So yeah, you're if you got 61 to 76, you're up 17 to 41,000 still. Yeah.
Yeah. So
Nice.
those black swan hedges make trades like this, really, I'm not that worried. So if we
Yeah.
go down there, my black swan hedge is going to start helping out.
Yeah, and that's the cool thing, right? The reason for the black swan hedge is it allows us to engage in some riskier income trades that we might ordinarily not have the confidence of putting on. But man, all you got to do is go to the analyze tab, shake it down, and just say, how would we be? Are we safe? Are we going to blow out an account? Or we're going to make money if it goes down? So we can put that credit on really good. What I like about that is let's just look at it was a positive delta trade. It gives us positive theta and just a little bit of negative vega. And of course, our vega risk is covered by our VIX hedge and it's covered by our black swan hedge. I like that, Tom. Thanks for sharing that with us. Now, is that one of Tony's trades as well?
This is like, well, he was doing a 4-4-1. But this is the same kind of risk profile graph. I used to also do what I call a bear trap, which is a similar looking profile, except mine had you can do it a couple different ways. But this is a little like a takeoff version of that, because it's just got less moving parts than that 4-4-1, and you can do it a 1-1-1. To me, just pretty simple.
You know what? I did not. I put on one of the 4-4-1, 4-1-1, whatever it is. I put on one of those. The only thing that I didn't like about it was the buying power that it took. Took a little, to me, it was a little more buying power than I wanted to put into the trade. So if we're doing 2 contracts of this one in my account with all the hedges that I have on, check it out. I mean, I'm getting a $91 credit and buying power of 0. Why would I not route this, Tom? Why we got you here?
Because you may have there
we go.
An MES hedge on or something that or something long in MES that your buying power might be 0.
Yeah, so I like that a lot. And so we call that what do you call it? 1-1-1, right?
It's a 1-1-1, yeah, essentially. But it's a 50 wide MES put spread, trying to get paying $10 for it, and then I want to sell a put for 20 that gives me a credit of 10. So now when you do two of those, if the market doesn't go down at all, you're going to make $200 on 0 buying power. But even with the buying power, it's going to be pretty small.
Let's look at 4 expirations. It'll have all my short puts in there, but let me see.
And like I said, if that long or not long, if the way out of the money short put, if that thing drops from 20 to 10, you buy one back and leave one on. Now you just have less contracts to worry about on the downside.
All right, so this trade will probably go to heck now since I'm in it, Tom. So don't be surprised if I'm messaging you and saying, "Hey, Tom, how do I fix this?"
It's easy. We're going to leave this one on. The only thing we're going to do on this one is probably just leave this sucker on, and unless we get something that's going to test us on the downside, or we want to close out one of those 2 long puts for $10, which was basically going to give us a little less risk on the downside.
Yeah. So how long have you been doing the 1-1-1 trade?
Not long.
I
just started doing them, so we'll see how it goes. But I like the trade, so it's become one that I really like.
Good. And that's what I hope we, our group can do more of. So I really do appreciate you popping in today and sharing that with us. And I'm glad I popped that one on. And glad the Black Swan hedge is working good for you. So thanks for dropping by, Tom. Maybe we'll change the time up more often so we can have you in here. I think it'd be great.
It's all good. I get it. Yeah, only I just have a meeting every day from 12 to 1. Other than that, well, I'm good. But I listen in. I try to keep up.
Good, good, good. All right, Tom. Well, hope you have a good day. Ken popped in. Ken, hope you are feeling better. We put on a new trade today. Tom showed us a new trade, a 1-1-1. So we'll
Okay, now look
well,
at that.
yeah, I'll share the video here in a second. Try to get everything uploaded, and you can go look it in. Hope you're feeling better as well.
Oh yeah, I'm over the withdrawal or the detox. Now I
Good.
just feel the normal decrepit self in the morning that old people get. And so I was out. We just finished our daylight date, and so I'm feeling good, man.
Oh, that's awesome. That is awesome. Well, I think I'm
Yeah, we
gonna
have
go take.
morning
I think
date
I'm gonna.
this time.
I think I'm gonna go take me a beauty nap. I think I've deserved it. So y'all have a
Yeah.
good day, and I'll talk to y'all later.